Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is Friday the 13th, 2016. Coming at you here with some thoughts on possible market tops, possible market rolling over here. What does that mean for us going forward, going into next week, going into the rest of this month, going into the summertime trading? As we've seen a lot over, particularly like last year, we basically had a market peak around this time last year. You scroll out here, 2015, you saw the market reach its highs. I think it was on May 21st, it looks like. Let's see, what date was that? Yeah, I think it was May 21st. Reached that high, and we haven't been back there since. So far, the high for the year was back in April, and we reached that around April 20th. And so there's a good chance, like we saw last year, that we're putting in the highs for the year already, and now we're going to start seeing this progressive rollover. You got to remember too, though, that even though we reached the highs in May, we really were in this nasty chop fest until August, when it finally just completely broke down and rolled over in a massive way. We have seen a big rollover already in January and February, where it bottomed out, and then a massive, and I do mean massive, rally thereafter. So the biggest thing for the bears going here, and it's been kind of painful to watch this week, and going back to last Friday as well, is this 50-day moving average. Now, you look at this 50-day moving average right now, and we are below the 50-day moving average, and that's a huge accomplishment for the bulls, or for the bears, if they can close below that 50-day moving average. You can see here in the final 30 minutes of trading here, they're trying to put maybe a little bit of a rally together here, but it hasn't been anything overly convincing. But you got a nice head and shoulders pattern, and this is what I've really been watching here for the most part, is this major head and shoulders pattern. You got your left shoulder, you got your head, then you got your right shoulder. And if we can get a move below this 2040 level, I mean, this thing should roll over very nicely as a result. So that's what I'm looking for here. I'm looking for a move below this 2040, 2039 price level on the S&P, and then things start to get really interesting from there, because you can see below there is not a lot of support underneath for the price to find any stability at. So you got 2040 at the neckline, you got around, what is that, 2011, I think. So like a 51, or no, I'm sorry, 60, 71 point move. So you could see possibly a move down to this 1960. So basically what I would expect is for a possible retest of this breakout level here, where you get down to 1950 to 1970 before there's any significant bottom there and a bounce of any kind. So that's what you want to watch on the S&P. IWM, similar head and shoulders pattern. I'm actually short on the Russell. We'll pull up the Russell for right now. I'm short on IWM, which is the Russell. The Russell 2000, you got a nice index there. This one's actually starting to show signs of coming together real nicely here. The left shoulder, head, right shoulder, and then you know, it's below the 50-day moving average. I don't expect that to recover into the close, though I could be definitely wrong on that. But you know, a close below 1107 would actually, is that the right price? And what am I looking at? Okay, my cursor keeps coming off of the candle. Yeah, close below 1101 would be really good. So really close to that as well. You go back to the S&P, not quite there yet. We need about a 6-point drop there to confirm the head and shoulders pattern. Not sure we're going to see that today, though it would be nice here in the last 30 minutes to put that together as well. The Nasdaq, putting this 200-day moving average, or at least trying to test it right here. The Nasdaq is a really complicated chart right now to trade. There's just not a lot of edge that you can trade with. I mean, it's ugly, it's nasty, it's very whipsawish, and I'm really trying to stay away from that from a shorting standpoint. And then you got the Dow Jones, which I don't pay a lot of attention to, but I do like to watch for different patterns that might be unfolding there as well. And you do have one. The head and shoulders pattern, it's pretty crisp, not as crisp as what we see in the Russell and the S&P. But, I mean, basically the neckline on that one is at 17,580. and we were about 40 points below that. So let me just double check to make sure that's right. Yeah, we're about 40 points below the so the head and shoulders pattern on the Dow is confirmed. So maybe this is going to be leading us to the downside. But very nice topping pattern, and of course you got the major topping pattern on the S&P going back 2 years into 2014, where you have this left shoulder, and usually the left shoulder and the right shoulder, between those two, the left shoulder is the bigger one, but here you got the left shoulder, the head, and you got this massive right shoulder. If originally we all thought this would be the right shoulder, but I guess you could say that this right shoulder is two humps. And the reason why this one doesn't nullify is because this one never broke above the highs of the previous shoulder, or the previous what we thought was the right shoulder. So this whole thing's the right shoulder. At least that's what I would say. Not a perfect candle anymore, but still a pretty nice topping pattern there. So you get a big sell-off here where we break below 1820, and obviously that's about 200, yeah, if we break below, was it 1810, I think is what it is. We break below that, that's what, 235 points away. We break below that, I mean, you're looking at a fairly significant move that could possibly take us way down here. So this could be an interesting election cycle, because this topping pattern is happening right before the election season, where you have the general campaigning going on between the two parties and stuff, and it'll be interesting to see the role of the Fed, which some people think they might even be raising interest rates in June. I'll believe it when I see it. I'm starting to really wonder if they're ever going to raise rates again. Not because they shouldn't, but because I just think they're a bunch of cowards. So they're choosing the path of free money and and trying to escape reality. Let's look at a few commodities here, and we're going to go look back at these on the daily chart. Gold's holding up pretty good. Strong day for it. Still finding the support off of the 20-day moving average. You can see consistently over the past month or so it has found support there. So could be a good long position. You can put your stop below the previous higher low, which would be on May 10th. Below one, I would just basically go below 120. It gives you less than a 2% stop loss on it, which is nice. I mean, it's clearly identifiable. It breaks below the May 10 lows. You don't need to be in this trade anymore, and you got some support there. So maybe that's a good trade for me to consider come Monday when the markets open back up following today. And then you got silver. Silver, it looks a little bit more toppish to me. And silver and gold don't always trade just alike. There's a lot different industrial uses for silver versus gold, so you have to take that into consideration as well. But yeah, definitely a little bit more of a topping pattern there. If it breaks below 16, I would say get out of silver, because you got a nasty gap here and a nasty gap here that this commodity could ultimately try to fill. Then, oh gosh, I hate oil, quite honestly. I've tried to short this thing a few times. I think I've tried now shorting it 3 times. I haven't had much luck with it. The last time was on May 4th. I shorted it. I was actually up like 2%, and then it gapped way up on me. It was this day right here. It was a pretty nice setup here going into the following day, and then we gapped way up, and then it gave back the gains. I think I took a 2% loss on that trade. Overall, though, the month of May has been outstanding so far for me. I know the market's not too hot so far this month, but for me, it's been a great start to the month. But yeah, USO, it's really not giving up much ground despite the market showing signs of rolling over. Dennis Gartman went long on it, oil, which probably tells you that oil is getting ready to roll over, because that guy is probably one of the greatest contrarian indicators that I've ever seen in my lifetime. I mean, that guy is a gem for traders to listen to. But yeah, I don't really see an edge right here. I don't want to get long on it because it's rallied pretty much, I don't know, what, 70% off of its February lows. So I don't really want to go after it from a long standpoint, because I think it's way overextended. But from a short standpoint, it just doesn't seem to be giving up any of its recent profits. So that's on that. On the other hand, XLE looks a little bit more like it has an edge. You can try to trade it here, saying that this is going to be a lower high and that it's going to move below this 63 level to establish a lower low. So I think this one will be a lot more influenced by the direction of the Dow, because it's trading companies, not so much the price of crude, even though it is influenced by the price of crude. If you're looking for something to trade, I would choose XLE over over crude as a whole. So for me right now, I'd be looking to short this thing, especially if it can break below that trend line. It breaks below that, you can put a stop loss, you know, above the highs from yesterday and see where it takes you from there. Then let's go ahead and look at some of these other stocks here. Apple, we've talked about it a lot this week. It's bouncing today. I wouldn't say that's an overly convincing bounce since it's only at 0.3% now. So it's given up a lot of its gains when the market sold off more this afternoon. It's got a lot of resistance now. That 92 level is going to be resistance going forward. That's just a fact of the matter. So this thing continues to sell off. Looking at the weekly chart, you can see a nasty sell-off down to this $80 price level before it gets any kind of support there. Also, you got Facebook. Obviously, it's in a trending pattern upward. I'm not going to call any tops on that. I think that's a foolish adventure, as is calling trying to call a top in Amazon. Both of these stocks are very strong, but then you take the second half of the FANG equation, and you got Netflix, which has been deteriorating of late. You pull out to more of a longer-term view there on the weekly chart. It looks like it might have a little bit of a topping pattern going on there as well. It drops below the 80 level. I think it's going to get much more bearish from there, and possibly even, I don't know. It could definitely move down to like the 60s before it finds some support. And we know from trading Netflix over the years that thing can get very volatile. Google, weekly chart there suggests there might be like a double top place, kind of a sloppy double top, but still a double top nonetheless. That confirms there around that. Confirmation level is a little bit sloppy too, but if it drops below 700, you could see the next stop being, you know, 612 or so. And I think, oh, the other thing I wanted to talk about too is like, especially to the long side, well, long side and short side, you really got to be aggressive in taking profits, because the market keeps popping higher, keeps selling off lower, and it's very difficult to sustain any gains. Point in case, you know, I had gone into GM, let's see, on May 6th. So that was, you know, basically last Friday. So and you can see here it was bouncing off of, let's get out of the weekly chart here. But I was playing it off of this trend line here, off of this rising channel, off of the trend line. We get a nice pop. The next day it sells off a little bit, and then we get a nice pop here. I go ahead and I booked the gains earlier this week. I booked them, took a 1% gain, sold at 31.34, and moved on. But I mean, you can see here, there's these trades, even though they get off to a good start, they're quickly reversing on us. So if I had continued to hold on to it right now, I would be looking at almost 2% in losses. So yeah, 1% isn't a great on a trade, but it sure does beat the heck out of taking a loss on a trade too. So LNKD, we got into this one in the SharePlanner splash zone, myself and members as well. We got long on it, got it off of that 20-day moving average, and also there was a lot of support right here, you know, in that 121 area. So we got in it at 124, had a phenomenal day here on Tuesday, and I basically day traded this one. I had, you know, 2.8% in gains. I sold it at 127. Yeah, it went a little bit higher even into the close, went higher a little bit the next day, but it's really not been able to do anything since then either. It's actually held up better than most stocks under the recent selling pressure, but still, I would have less gains right now had I tried to hold it through that 3-day pullback. So you do got to be aggressive, I think, to the long side and to short side with taking profits. I think the short side definitely is trying to pick up some momentum here, closing below this 50-day moving average. I think we need to see how the market does with it on Monday. If we do, in fact, hold this into the close, if it can it break below this neckline on the head and shoulders pattern? If so, it gives a lot more substantiates the reason to continue holding even further to the downside on this market. But if it bounces on money, then you guys start thinking, okay, where am I going to start taking profits on some of these short positions? Because right now I have IWM, which I'm short. I got short on that yesterday, and then I'm short, or I'm not short, but I'm short the S&P using SPXU. I got out of it. Well, let me back up. I got in on Wednesday. I got a bit spooked by the afternoon rally there. I mean, that 20-point rally, I got out of it. So yesterday I sold it for a 1.4% gain when the market gapped up and it looked like it wasn't going to hold those gains. I went ahead and jumped back in it again at 28.30. So right now So yesterday I sold it for a 1.4% gain. Right now I'm up about 2.8% on the trade too. So so far pretty good, but I want to see what the S&P does into the close with the 50-day moving average, and Monday what it does with that the neckline of the head and shoulders pattern. So that's going to do it for today. If you guys have any questions, feel free to email me, ryan@shareplanner.com. I would love to have you guys in the SharePlanner Splash Zone. It's a great trading environment. I post all my trades real time there. Lots of dialogue that goes back and forth about trades, about the market, and everything else. I'm there to answer your questions. And you can find out more information for the SharePlanner Splash Zone by going to shareplanner.com/splash zone. Once again, www.shareplanner.com/splash zone. So I hope you guys all have a great weekend. It's Friday. It's been a good week of trading. Not so great for the markets, but you know, for me and members of the Splash Zone, it's been pretty good. And I hope you guys all have a great weekend and be ready for Monday morning. Take care and God bless.